Every April, around 70% of Americans get a tax refund. The average refund in 2024 was $3,011. People post about it online. They celebrate. They treat it like a bonus, like found money, like the government did them a favor. Here's what actually happened. You overpaid your taxes every single paycheck for 12 months. The IRS held your money, earned returns on it, and handed it back to you in the spring with zero interest and zero apology. You gave the most powerful financial institution in the world a free loan, and you thanked them for returning it. My name is Larry, and I've spent years watching people make this mistake without realizing it's a mistake at all. By the end of this video, you'll understand exactly what that refund is actually costing you in lost wealth, the simple adjustment that fixes it, and what to do with the money you get back in the process. Because the difference between celebrating a refund and redirecting that money is, over a working lifetime, the difference between retiring comfortably and retiring broke. Let me start with a story that has nothing to do with taxes. In the 1800s, a merchant in Amsterdam discovered he could store his neighbor's gold for a small fee. The neighbors were happy. Their gold was safe. The merchant was happier. He was sitting on a warehouse of gold that wasn't his, earning returns by lending it out while the owners thought it was just sitting there. The neighbors got their gold back eventually. The merchant got wealthy in the meantime. That is your relationship with the IRS every year you get a refund. You are the neighbor. The IRS is the merchant. And your $3,011 is the gold. Now, $3,011 doesn't sound life-changing, but let's run the actual math because this is where most people's thinking completely breaks down. That $3,011 didn't appear in April. It was withheld gradually, roughly $251 a month from every paycheck. That means every month for 12 months, you had $251 less than you should have. $251 you couldn't invest. $251 that wasn't compounding. At a 7% annual return, $251 invested monthly for 1 year grows to about $3,130, $119 more than the refund itself. That's year one. Now run that same correction for 30 years. The person who adjusts their withholding and invests $251 a month instead of letting the IRS hold it ends up with approximately $306,000 more at retirement than the person who keeps overwithholding and spending their refund every spring. $306,000 from one adjustment on a single IRS form. Let me show you exactly how this plays out with two real people. Ryan is 30, gets a $3,000 refund every April without fail, uses it for a vacation, a new TV, maybe a little toward credit card debt. Feels responsible. Feels like he's treating himself. By 65, he's enjoyed 35 annual vacations funded by his own overwithheld money and has nothing to show for it in his portfolio. His coworker James is also 30. Same salary, same tax situation. But James adjusted his W-4 3 years ago. He gets roughly $0 back in April and has an extra $250 in every paycheck. He automates that $250 directly into his index fund the day it hits his account. By 65, James has approximately $306,000 more than Ryan. Not because he earned more, not because he was smarter about picking stocks, because he stopped giving the government a free loan and put the money to work immediately instead of 11 months later. The refund didn't disappear. It just compounded for Ryan's retirement instead of sitting in an IRS account for most of the year. Here's the psychological trap that keeps people locked into overwithholding. The refund feels like a windfall. It feels like a gift. It arrives in a lump sum, which makes it feel larger than it is. And humans are terrible at valuing money spread across small monthly increments versus the same amount arriving all at once. That's not stupidity. It's how our brains are wired. We process $3,000 in April as significant. We don't process $250 missing from each paycheck as significant because it disappears before we see it. The financial industry knows this. Banks run promotions every spring, specifically targeting refund recipients. Car dealerships advertise tax season sales. Retailers know the April spending spike is coming. They're not celebrating your good fortune. They're waiting for your money to land so they can capture it before you make a rational decision about it. Think of the tax refund cycle like a vending machine with a 12-month delay. You put money in during January, you get your selection in April. The machine kept your money for free all year, and you're grateful it finally dispensed. The house always wins because you designed the game yourself and then forgot you designed it. Now, I want to address the pushback I always get here because it's a fair one. Larry, I'm terrible at saving. If I have the extra $250 in my paycheck, I'll spend it. The refund forces me to save because I can't touch it. I hear this all the time, and I understand the logic. But there's a fundamental flaw in it. You're using the IRS as a savings account that pays 0 interest when you could be using an automated investment account that pays 7% annually. The discipline problem isn't solved by over-withholding. It's solved by automation. Set up an automatic transfer from your checking account to your brokerage the same day your paycheck hits. The money disappears before you can spend it. Same psychological effect as over-withholding, except now it's compounding for you instead of sitting in a government account. The over-withholding strategy costs you the return. The automation strategy gives you the same discipline for free. Here's the 5-step system to fix this permanently. Step 1. Calculate your actual refund or balance due from last year's return. Pull up your most recent tax return. Look at line 35A. That's your refund amount. If it's more than $500, you're over-withholding. If it's more than $1,500, you're significantly over-withholding, and this is worth fixing immediately. Step 2. Submit a new W-4 to your employer. The IRS redesigned the W-4 in 2020, and it's now much easier to use. Go to the IRS tax withholding estimator online. It takes about 10 minutes. And it'll tell you exactly what to put on your W-4 to get as close to 0 refund as possible. Then print the form, fill it out, and hand it to HR. That's it. No accountant required, no complicated math. The government built you a free tool to do this correctly. Step 3. Open an automated investment account if you don't already have one. Fidelity, Vanguard, Schwab, all of them allow you to set up automatic monthly investments. Pick a low-cost total market index fund. Set the monthly contribution to match the amount your paycheck is about to increase. Make it automatic. Make it invisible. You will not miss money you never see. Step 4. Redirect any remaining refund you're owed this year into investments immediately. Don't spend it. Don't let it sit in checking. The moment it hits your account, move it. Treat it as a one-time catch-up contribution. You're not losing a vacation. You're buying the last piece of a system that will quietly build wealth for the next 30 years while you're doing other things. Step 5. Revisit your W-4 anytime your financial life changes. Got married? Had a child? Changed jobs? Started freelancing on the side? Each of these affects your tax situation. Most people set their W-4 when they start a job and never touch it again for decades. Your withholding should be a living document, not a set-and-forget decision you made at 23. Here's the bigger picture that most people never think about. The average American works for 40 years. If they over-withhold by $3,000 a year every single one of those years and don't invest the difference, they've handed the government approximately $120,000 in interest-free loans and received exactly 0 return for it. That same $250 a month invested consistently at 7% for 40 years becomes $656,000. The gap between the person who fixes their W-4 and the person who never thinks about it is not a few $1,000s. It's the difference between a retirement that feels cramped and one that feels free. And here's what makes this maddening. Fixing it takes 25 minutes. One visit to the IRS website, one conversation with HR, one automated transfer set up on your brokerage app. 25 minutes to potentially recover hundreds of thousands of dollars in lost compound growth over a lifetime. Most people won't do it, not because they can't, Because the refund feels good, and changing things that feel good requires confronting the fact that you've been doing something suboptimal. That confrontation is uncomfortable. It's easier to just wait for April and feel the dopamine hit of a deposit you've been earning all year without realizing it. The people who build real wealth are the ones who get comfortable with that discomfort, who look at the thing that feels good and ask, is this actually good, or does it just feel that way? And more often than not, the answer changes everything. Adjust your W-4, automate the difference, and stop celebrating the return of your own money. Subscribe if this one stung a little. That usually means it was useful. Drop a comment. Are you in the refund camp or the zero balance camp? Because I want to know how many people are actually doing this correctly already.